Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today we're going to be looking into another stock. I know I've been doing a lot of single stock reviews lately. I am getting requests to do some stock reviews, so I'm just looking into these, providing content for you guys. If you have any questions on any stocks, let me know and I can perform a review. Again, it is not financial advice, it is just my own review. I don't even know what I'm doing. So without further ado, today we're going to be looking at Newegg, ticker symbol NEGG. I've never purchased anything from Newegg. I do know this has been in the news wires before for the stock surging up and then coming back down. We're going to look at the company. We're going to look at the fundamentals. We're going to look at the technical side. We're going to see how much debt they have, if insiders are buying or selling, are sales going up or down, and just kind of go from there. Without further ado, let's all subscribe and jump on in. All right, you guys, we are on newegg.com. I just wanted to look at the website because I haven't been here in years. Just want to see how it is, how user friendly it is, what kind of deals they got, etc., etc. Um, so yeah, this is their website. It looks like they sell electronics. They have camping wagons, bicycles, a lot of stuff. I guess it's not just computer electronics anymore. They got cabinets, baking stuff, canopies. That's cool, but yeah, interesting. I had no idea they were expanding like that. And they have independent sellers on here. All right. Pretty cool offerings. Let's look at the stock. So here's the stock. Um, the stock has been kind of trading in the dollar range for a while now. This is the daily. We don't really care about the daily. We're jumping to the monthly because the monthly gives us a better picture. One thing I do automatically see is this. So, it looks like this is February 2014, this is July 2021. Every 7.5 years, 6.5 years, 7.5 years, it spikes to incredibly high levels. Oh, my head's in the way. I'm sorry. Here we go. So I just drew this long-term resistance. So again, the price never breaks above this. And it looks like the stock has never gone below this line for a long period of time. It's always bounced, kind of come up here, rounded it out, bounced up. Now it's touching it again. So I guess my first question is, does this stock deserve to be trading at these levels or should it be higher? Let's look. It looks like RSI is kind of coming around actually. Let's move it over. So RSI is kind of curling up. Momentum looks like it's shifting upwards here as well. Money flow looks like a sharp move up. That's good. We like to see that. And it looks like the relative momentum is kind of skirting off the ground and maybe kind of swooping back up potentially. But none of that matters until we look at the calculations of what they're bringing in, et cetera, et cetera, et cetera. So, let's go ahead and do some math here. They make $1.72 billion. Good for them, but they're losing 57,400,000, so they're not profitable. And they don't have a market cap over $1 billion, so I'm not going to include that into the calculation. So now I'm going to go down. Let's add their cash, which is 122 million. That's the most cash they've ever had. Good for them. Plus 122,560,000. Total debt is very low. Good. Minus 7,730,000. Correct. Let's take a peek. So they have total assets of 542 million. Total liabilities 386 million. Not too bad. Wow, they used to have 6 million in assets with 3 million in liabilities. So they took a huge jump in 2021. And they're kind of just moving upward. Assets went down, liabilities went down as well, so I don't know what that was all about. Cash is at an all-time high. Let's look at the quarterly though. Yeah, so that's good. Let's look at their income. Wow, they were barely making nothing for years, and then they were making billions. They made 2.3 billion in 2021, then 1.7 billion in 2022. That's insane. Oh my God, but look, they spent $2 billion to make $2.3 million. So literally this number right here, the 0.36, is literally the same right here essentially. And then they spent 1.5 billion to make 1.7 billion. So that's actually good. That's 200 million right there, right? Yeah, but it's not as good as it was. Yeah, man. So their gross profit's going down. Um, yeah. So I don't know what's going on here. Are they in the US or they're in the USA? Numbers are in the US dollars down here. You guys can't see it. Okay. So did I do, yeah, I have this. And we're going to divide this by, gosh, okay. So there's a few things. We could divide it by the shares float, which is going to give us a huge number. Divide by 25,300,000. $70 stock. But if we go back to, let's see, what was it? 17743. Divide this by 375,860,000. So this is between a $4 to $70 stock. I mean, there's only 25 million shares available to trade, but there's 375 million shares outstanding, which is crazy. Um, yeah, so this is kind of crazy. Let's see what the institutions are doing. Intel, and we're going to type in neg. Institutions own 0.52%. And if we see over here, it's gone down quite a bit. So 0.52%. So institutions are selling. Not a good look. Not a good look. Um, I mean, I just don't know how to feel. Like, yeah, their gross profits are much different, but they're literally spending so much. They spent 2 billion, then they spent 1.5 billion. Oh man. So it just goes to show that their product is not really sticky, but they are creating these partnerships with Roku and who else? Mercari. I don't know. This is tough. I don't think it's a bad price right here, but it's also just like I don't know how to feel about it. You know? Like it's only gone down. The CEO is Anthony Chow, Paching Chang, Yao Chang, Jamie Spanos. I just don't know how to feel about this one, guys. I don't know how to feel about it. They're spending billions to make a billion. Their gross margins are so low for an internet retail company. I would say it's not a bad stock. Technicals are looking good, but I would just watch out for their earnings. Yeah, let's see. Let's see when they're. This company could do really well. Earnings not telling the story. Let's see what this article by Simply Wall Street. This is just an automated story, so yeah, this is tough. I don't know about this one, guys. I mean, historically it's at good levels, but they're just in danger if they're spending billions and they're not even profitable. So they could have a really good quarter, but we're gonna put this one on the back burner for now. I don't even, yeah, I don't know. This one's tough. This one is tough for sure. I mean, recently it was under $1, so I mean, if they could like really get some good partnerships and get their brand to be more sticky, I mean, they're a good, I think they're a good acquisition target, but I mean, they have so many shares outstanding. It's like, it's a lot. So we'll pass on Newegg. Institutions don't really seem to be doing too much. Hangzhou Liaison Interactive purchased more stock. Simplex Trading purchased some stock. Blackstone sold some. JP Morgan bought some. State of Wyoming bought some. So again, I would do your own research on this. I don't really feel too good about it. It looks like it's at a bottom, but again, they're spending billions to make billions, and if yeah, I don't know. Margins are really low too. So this just does not really hit my marker here. So I'm gonna pass. I'm probably gonna regret passing on this in a few years, but it'll probably come back up again on my charts. Let's see. Let's see what I have on my Thinkorswim. All right, I do have this one charted out. We're on the weekly. I want to be on the monthly. Okay. So we're looking at the monthly. So it's fallen out of my accumulation rectangle. Could be an amazing buy opportunity. I mean, this is getting ready to flip, it looks like. RSI on the monthly is kind of low. Not good strength at the moment. I mean, sales are kind of strong. 18, or not sales, volume, 18 million. Let's look at the yearly MACD here. Oh, wow. Yearly shows it's ready to flip. You see this? Yearly shows that this is ready to move around. So you know what? Yeah, I don't know. I don't know how to feel about this. It's showing that the yearly is rounding around. So I think methinks this could be a decent play. Could be. I'm just not sold on it, you know? I wonder if I can see their latest presentation, investor presentation. Investor relations. Okay. Review all. Okay, so this is from January 2023. All right, who we are, good for you. So they're showing that they're strong, but their margins are so bad. Yeah, 2.4 billion net sales, but you paid 2 billion for that sales. So, okay, they're expanding their partner service program. Good, that's good. Okay. All right. It's a lot of pictures. Okay. Cont Why are they showing us this is from 2020. This report was from 2023, but they're showing us 2018 to 2021 data, which is so ridiculous. Why are they doing that? Okay, so they're saying oversupply of IT components flooded the market. Excuse number one. Overall PC and PC components was soft due to macro increased competition, low customer demand. Uh, unaudited, we don't want no unaudited information. Okay. Yeah, I just can't. I just can't. I think they're going in the right direction, but this right here is very misleading. Why are they showing us 2018, 2021? 10% GMV growth, 32% in repeat purchase for those years, continued gross margin expansion for those years. Why are they even showing this in 2023? They're not showing 2022. Continued gross margin expansion, that is a lie. That is a lie. Let's see what they're. Yeah, they're showing the data before they took on huge. Yeah, no. Very misleading, in my opinion. We're going to pass on Newegg. Good luck to them. They're heading in the right direction. If you made it this far, continue, or if you've made it this far, please consider subscribing and hitting the like button. Have a good day.